Most people today don't use cash or checks when transferring money, but rather they use money transferring apps such as Venmo, PayPal, Cashapp, or Zelle. These are all great and convenient ways to send money to people, but they might carry with them their own tax problems. My name is Ryan Stegenga, and today we'll go over some of the tax consequences of using apps like Zelle, PayPal, Venmo, and Cashapp. As always, be sure to like this video, subscribe to the channel, and leave a comment down below letting us know which platform you prefer. In 2020, the federal government changed some of the rules that govern what happens when you send money through apps like Zelle, PayPal, Venmo, and Cashapp. Previously, those platforms didn't have to worry about anything unless you had more than $20,000 in transactions and more than 200 transactions in a year. With the American Rescue Plan of 2021, the federal government changed those rules to say that anytime there's a transaction more than $600, those parties now have to send a 1099-K. This now goes in effect for the 2023 tax return due in 2024. So for your tax returns due this year, that would be your 2022 tax return, the rules stay the same, where you have to have over $20,000 worth of transactions and 200 transactions. So just to be clear, this year's tax return due next year in 2024 is when you have to be concerned about the $600 in total transactions and receiving a 1099-K. Your 2022 return due in a few months is a grace period where you get to use the old rules for reporting. The problem with this new rule is that it might cause tax consequences for people using those apps. Those tax implications can happen to the different types of accounts that the different platforms have. Most of those platforms will distinguish between a business account or a personal account. Business accounts are pretty straightforward. If the business is receiving money through these apps, they'll receive a 1099-K showing the gross income received. Businesses will then use this to report income on their tax returns. The personal side gets a little different. If you're sending money to family and friends from your personal account, it won't be included or reported on a 1099-K. Most of these apps will ask you to distinguish how payments are being made. They'll usually distinguish between sending money through friends and family or if they're being sent for goods and services. But if you're using your personal account to purchase or receive funds for goods or services, or for a purchase, it will be reported on a 1099-K. Let's say, for example, you have a couch that you bought for $100 and you're selling online for $50. Somebody sends you $50 and they mark it as a purchase through one of the apps. Technically, you'll receive a 1099-K for the $50 for selling the couch. But this isn't really taxable. When the IRS takes a look at that form, they'll see that you earned $50 and they'll want their tax on it. However, there are rules that mean that $50 can be excluded from your income. Some of the specific examples that the IRS provides are money received from a friend for a reimbursement, such as splitting a check for dinner, money received from a roommate for the purpose of paying rent, money received from a loved one as for a gift, and finally, money received from selling a personal item at a loss. The problem with this is that the IRS currently doesn't have a place on the tax return to highlight that you're excluding this income and why. This means it becomes your responsibility to maintain records. For starters, Cashapp has said that they won't track transactions for a standard non-business account. They'll only track transactions for business accounts for the sale of goods or services. On a side note, if you're using Cashapp for crypto, you can bet that they're going to send you a 1099-B for all of your transactions. Now, most of you already may know that PayPal owns Venmo, so they act very much the same. When sending money through PayPal or Venmo, there's really no distinction between a business account or a personal account like Cashapp. What will matter here is how the funds are sent. When sending the funds, you're either able to select that they're being sent to friends and family or for goods and services. If you're sending funds as goods or services, the receiver can expect to receive a 1099-K, regardless if they're a business or not. Now, you may think it might be better to send things as friends and family through PayPal and Venmo, but that might not be the case. Both PayPal and Venmo has said that you won't get purchase protection if you send funds as friends and family, but you will get purchase protection if you send it as a goods or service. Zelle operates differently than Cashapp or PayPal and Venmo. PayPal, Venmo, and Cashapp all actually settle funds which is a big difference. Since Zelle doesn't actually settle any of the funds, they don't have to worry about issuing 1099-Ks. Zelle has specifically said that they don't settle funds, but rather provide a messaging service between financial institutions and people making payments. Be sure to check out my previous video dealing with taxes with Facebook Marketplace, Etsy, and eBay. As always, be sure to like this video, subscribe to the channel, and leave a comment down below letting us know which platform you prefer. I'm Ryan, and I'll see you in the next video.